谁能代表？
第二一个，你听我说嘛，你着急嘛，小伙子。第二一个哈，今天来参加会议的哈，是我们青羊区政法委维稳办的这个何书记哈。有一句话哈。
Hello, welcome to today's episode of CCP Reality Check. Today is November 12, 2022. This is your host, Angela, and I'm from Washington, D.C. farm, a proud member of the new federal state of China. And please welcome my co-host, Sam. Hi.
Hello, this is Sam. I'm the co-host. I'm also from Washington, Himalaya, D.C. farm. Thank you so much for joining us today for today's episode.
Yeah, thank you so much for joining us. So today we continue on our topic of how a Chinese Ponzi game came to Wall Street. So as usual, we have our usual disclaimer. This video is for educational, informational purposes only. Next slide, please. So to recap a little bit, in our last episode, we talked about a company called Q&K International. And this company has been in business since 2012. And it is engaged in a business called long-term subleasing and property management company. So it is providing small apartments for young people in Chinese urban cities. And it is using a business model of like working with the landlords and the tenants and also property management companies to do these kind of business. And this kind of business is a very thin margin business and also a very light asset business. There's virtually no asset in this business. So this business is headquartered in Shanghai, and it has been growing rapidly since 2012, and actually it has grown like tenfold up until 2019 in a short 7-year period. And by the end of 2019, this company went IPO on NASDAQ, even though we will show the audience later that even though that this company had been steadily losing money for so many years, and actually for 2017, 18, and 19, it lost a lot of money, almost to the sum of $150 million. So we're going to show that later. Next slide, please. So here our viewers and audience can see this chart, and this chart is being taken from the SEC registration document, and we can see that this business looks so nice on paper, and it has a good margin, 25% to 30%, but that's like a quote unquote 25% to 30%, and there's actually a lot of water with regard to this number. And this also this company shows that it has 91% occupancy rate. So yeah, we're gonna talk about more details of how this company does this business. Next slide. So this is also a recap. We know a most important feature of this subleasing company is that it will sort of remodel existing apartment, and they don't remodel the existing living room into a separate living unit. They call it N+1 model. They even have a nice term for that. So that's a no small job, right? So the initial investment is pretty high, like upfitting the apartment with appliances and furniture and also remodeling work, and that takes a lot of money. So we can see the startup cost for this kind of business is very high. And also in China, the industry competition have been very severe because Q&K actually have up to maybe 4 or 5 different industry competitors in trying to all grab a share of that market. Next slide, please. So Sam, we saw this chart before, and we know this is sort of a very complicated business, right? But because in America we see the property management companies, and then it's a simple relationship between the landlord and the tenant, and the property manager just takes providing service and takes fee income, right? And here, like in this landscape, we have 2 more different players, because we have a tenant and landlord, and then we have Q&K, which is a subleasing company, and it also works with property managers actually, so they pay them a fee. And in addition, there's also a financial company that's involved. So this is a brand new business model, which is very, very, very complicated. And we know the financial company is providing a so-called rent loan. That rent loan is usually at least 2 years in term. So it is providing a lump sum income for Q&K. And later we will see, and this factor is an important factor for the survival and expansion of Q&K. And actually it is its lifeline, because otherwise, in all aspects of this business, it seems to be a money-losing business. But this new blood, new money coming from the rent loan is funding its growth. Yeah, so next slide, please. So Sam, as we discussed last time, we know that this business model is deeply flawed, right? So the margin is kind of so thin and is even negative. And here I'll give you an example of what the rent is like and how much money is paid to the landlord. For example, say that they pay the landlord 1,000 renminbi, which is 1,000 yuan, right? And they rent out for $1,200. And this is this is an ideal situation, but in a tough competitive environment, what this company trying to do is like they are trying to get the apartment by offering more and more money to the landlord, and also lowering the rent for the tenant, so that that margin is really being squeezed. And they also offer, like, for example, 10% discount if you pay the 12-month rent at once, because the rent loan, right, provides all the rent pay, actually 2 years of rent, they paid all at once. So for that, you get 10%, so that you can see that the margin is being seriously squeezed by all of these competitive pressures, and also by the discounts. And also, Q&K also offers to pay the interest to the financial institutions, so that also squeezes the margin, and the margin, could essentially be zero or negative. And also, what is special about this business is the remodeling cost. We know on average this remodeling cost is 15,000 yuan. Which is a huge sum, right? This is like more than a year's of rent income. So later, when we show the audience a video of the company's CFO, when she talks with a Wall Street a journalist, and so the journalist was asking her, how soon can you recuperate the startup cost? And she just literally lied to him. She said, we can recuperate within a year. But, based on the very thin margin, we can easily calculate that this startup cost would take about 6 to 10 years for them to break even. So that company is just lied. It's very, blatantly lied.
They told the SEC their margin is something like 25%, but actually they are zero or even negative, and that's based upon like 100% rent rate. If you even if you rent every unit out, it's a guarantee to lose money.
Yeah, it's guaranteed to lose money. So we know that the purpose of this company existing is not to do a decent profit-making business, and we will talk about that later. Why? So what's the end goal of this company? The end goal of this company has something to do with Wall Street, and they know it's about to take them about 10 years for them to reach their end goal. So they just plan to expand at all costs, because why they can expand? They can expand by just enlisting on new tenants and expanding to new cities, and then based on the rent loan, they can always have new money coming in. So this is a kind of business that's just by pretending and cheating, and then we will show the audience how they lied in the SEC registration document. Next slide, please. So we know that from 2012 and 2018, this company has expanded 10 times. And by this time, the company has been taken in the first series of investment. And one of those investors is in Morgan Stanley. So Morgan Stanley is one of the initial investors that he wants to see Q&K succeed. He wants to see an IPO happening eventually, so that it can recuperate its initial investment, right? So we know Q&K, there are a few things that shows that it is doing a Ponzi game, and number one is that since it is in a subleasing business and doing property management business, and that should be its sole business, and that should be its main business income, where it's coming from, right? But that is not true. Actually, Q&K tried to use its revenues from the rent loan. It's trying to invest those money in the stock market. So it tried to, make money from the stock market as, one of its business income. So this is an indicator of Ponzi game. It is not trying to make its main business successful and profitable, but it is trying to just, make the money grow, at any cost. And also another indicator is that Q&K is not making money, out of a decent, rent property management business, and it's relying heavily on newcomers and on a new rent loan to fund its growth. And this is another classic indicator of Ponzi game, right?
Yeah, actually, they were using the rent loan to make our investment. That's totally, bring in additional risk to the company.
Yeah, but that is essential for its survival and expansion. Without making those financial companies providing the loan, this business will be dead long time ago. I think by now we can probably roll our clip number 1 to show how the CFO Jackie, lied to the Wall Street
The Chinese
journalists.
government will rely on a core circle of old.
We are actually positive in the second year.
Wow. Well, look, the reason I ask is because we know, obviously, that the Chinese housing market has endured years of sort of upward growth. Speculative buying has been actually a problem the government have been very concerned about. Mm-hmm. What happens if we do end up with a significant market correction and you're sort of halfway through a lot of these projects to develop for the renters?
Oh, well, the risk of that is actually quite minimal, because we have 3 demographic trends that's really supporting us. The first one is on the supply side. Because the homes are so unaffordable, there are more and more people who have decided to rent for the foreseeable future. So the demand is actually going up. And on the supply side, the landlords used to be able to just hold on to these idle assets and still be able to capture a nice price appreciation every year. But now they can't do that anymore. They have to make these assets productive by renting them out. So the supply also increases. And then the municipal governments are completely behind this because they need to attract young people to relocate to their cities and make them, enable them to really settle down in their cities. And they need to make the process easy. So they are supportive businesses like us to solve this problem.
Now, I mentioned obviously interesting time for a consumer tech company to list at the moment, particularly a consumer tech company that is sort of neither quite a real estate company nor a technology company. It sounds a bit like another big one recently. Why did you choose to go public now?
Oh, well, we are ready. The company, in its long-term trajectory, we have already established our business model, and we have established a very strong foothold in the segment that we focus on, which is the monthly rental under 2,000 RMB, which is equivalent to $280 per month, and we're the leader by far. So we're quite ready for that, and we want to gain access to the sophisticated capital market to capture the rest of the growth. We are actually.
Yeah, great. Now we go to our next slide, and we can see how this company lied blatantly in the SEC registration document. So it is a self-claimed emerging growth company, even though it had been losing a huge sum of money for the past 3 years before the IPO, and it changed the IPO document 3 times prior to the official IPO. It's revising down the dollars because now they realize their business really looked pretty bad and they cannot expect to get the same amount of money. So in the SEC registration document, we can see that this company is not transparent on real business margin. For example, it's disclosing the average rent, which is about 1,200 yuan, but not disclosing the average pay to the landlord. Because if they really disclose that, then the investor could tell, the margin is it's probably very low or negative. And so in the SEC registration document, routinely, all the business discuss about all the risk factors, right? So even though Q&K has, they disclose a big laundry list of different kinds of business risks, but they are not really being transparent on the real business risk because there's no real numerical analysis of what are their detailed real business risks, what kind of what the magnitude of the risk, and if things turn south, if the economy turns into a recession, what can happen to business. None of these real business analysis has been discussed in the SEC registration, as we can also see from the previous clip. So when the journalist asked Jackie about if the business turns and how are you going to handle that, and whatever her answer is has nothing to do with the question itself. She just basically talks about demand and supply, and also the government is behind, is supporting its business. So that's not really discussing any real business risk at all. And actually, later on, we're going to show the audience actually, the Chinese legislation changed on the company. So it tightens the requirement on how much of the revenue can be funded by rent loan, and that gives this company a big blow. Actually, it turned their business upside down. So yeah, this is so ironic.
Angela, what makes me really disgusting is Wall Street is open to thieves and liars, especially if you are come from Chinese or Communist Party manipulated companies. You basically you're afraid to cheat, you're afraid to steal, you're afraid to rob money from the American market.
Right, because there's no real audit, there's no balance and checks against any of their claims. So we can go to the next slide. Next slide, please. So here we give the audience another example that why this company is not being transparent. So I think in the SEC registration document, whenever there's anything that's beneficial to the business, they would highlight it. They would create a beautiful chart of figures to highlight their advantages, right? But then they would hide all the disadvantages. For example, in this chart, they would disclose that, okay, our lease term to the landlord is long, it's like 3 years or more, but they did not disclose that the lease term to the tenants, they usually 12 months or less. And actually, the majority of the tenants do not renew after the end of the lease. So that's subjecting the business a huge risk, because even the rent loan is a 2-year term. And then the tenant only lives there for 1 year. And then, what happens? So the company then has to pay back the next year's rent back to the financial company. So all of these things they don't disclose. Next slide, please. So we have talked about in a document that routinely they have to disclose a laundry list of business risks, right? And these risks including the legal risk and including recession and if the tenants fail to pay and all of these. But actually, after this seems to be nice and transparent on paper, but actually, the document does not discuss anything that if the recession comes and if the legal environment comes, what will really happen to the business? What are the numbers? What are the impacts? And those things are never really addressed. So that it just like a big mess. Next slide, please. So here we talk about why this kind of garbage company, and they're not really doing a profitable legitimate business, and why can they even come to Wall Street and get the small investors' money? So we know that could happen because they have helpers, right, Sam? They have helpers like companies like Morgan Stanley, which is their underwriter. They have the huge interest to make this company successful. So they help this company to lie. So we know CCP has been in bed with Wall Street for more than 30 years. And also, the politicians, the legislation doesn't protect the small investors either, right? Because we know that the CCP has been, doing the BGY to the politicians as well. So we know there are almost 300 like Chinese companies being listed in U.S. stock market, right? And these companies cannot be audited, subject to the same accounting oversight, similar to American public companies. And we know, the new legislation in 2020, and by the December 2020, holding foreign companies accountable act, that will turn this around. But for the past 20 years, these kind of company has been like playing in American stock market as if it is just a free game, like they can lie and cheat with no consequences. So next slide, please.
So Angela, before we go to the next slide, I just want to point out that each of these companies they must have the CCP permission to get their IPO in America. So these are CCP, Chinese Communist Party, manipulated companies. Actually, they have the privilege to rape the American chives in our American market.
Yeah, reap the chives. Our Chinese viewers will be familiar with the term, but our American audience will probably, be getting very familiar with this term too, because reaping the chives has been a game that the CCP has been playing with the Chinese 老百姓, right? Because so after the chives will grow, to the next round, and they reap again and reap again. So all, the Chinese 老百姓 has been just doing slave labors and without, getting a lot of wealth for them, because It's just all the profits have been reaped by the CCP. And now the CCP has a chance to come to America to reap the American small investors. So the American small investors become the new chives. So, sadly.
Sadly, yeah.
Yeah. So we know, as expected, this company cannot do well. It cannot survive for very long. And in about 2 years, the stock price has lost about 98% of its value. And actually, we know that by the end of 2022, the company has filed for bankruptcy. So as Jackie has mentioned, the government is behind them, and the legal risk is low. But actually, the legal risk is pretty high because the Chinese government required the rent loan to be less than 30%. But they were doing 65% because that's their main source of income. So that turned their business upside down, and also the pandemic since 2020 is also subject to their business to a recession. So next slide,
Yeah.
please.
Angela, before we go to the next slide, the average American investors, they all lost, right? But Morgan Stanley won, right?
Yeah. So Morgan Stanley won, and also the company CEO, the CFO, all the top executives, they left the company in 2020, shortly after the IPO, or early 2021, and I think their pocket was pretty full, right? Pretty fat after, and that's their end goal. And then their end goal of building this company is never to play a decent game with the renters and the landlords, providing, renting opportunities. That's not their end goal. Because they know that business, is so thin, it doesn't provide much profits. Their end goal is just to come to Wall Street. And they know that's going to take 10 years, and they've been playing hard on that. So next slide. So next slide, please. So we want to just, summarize what we have talked about, like companies such as scandal being breaking on, they've been cooking the books, right? So why these kind of things can happen in America and hurting small investors, and then that's because that's a gigantic love affair between Wall Street and the CCP that's been going on for 30 years. And then we know the CCP strategy is always the BGY, right? Everybody that use the social media, use the money and sex to bribe the politicians and change the law to their favor. So the end result is that the American small investors became the CCP's new chives, which is very sad to see. We know a lot of pensioners has been losing their money right after retirement, so that's a very sad thing to see. But gladly, we see there's the new HFCAA Act, Holding Foreign Companies Accountable Act, will bring a huge wave of delisting of these companies, such as the Q&K. So
Yeah. So Angela, for more than 10 or for more than 3 decades, I'm not sure what exact years. But, these are Wall Street actually, they feed the CCP, right? And
Yeah.
and actually they provided like a financial support for the even People Liberation Army, right?
Yeah. Right. We know, who became the lobbyist to whichever party in power, the lobbyists and, are very influential and they've been paid by CCP money.
And Angela, I also want to, to remind our audience from the opening, like a video clip, we know that even in Chengdu, in one city, that more than 10,000 like renters became like homeless in one
Yeah.
city just because of this one company. How many big cities does like China have? How many such companies does China have? So it's a totally a social disaster there.
Social disaster. Yeah, they're playing a very reckless game. They're hurting not only the Chinese people, but the American people. And as we said, all they cared about is to get their IPO, to get their fat wallet. And yeah, so yeah, that wraps our show for today. And we're going to thank our audience for joining us today, and we are going to see you in our next episode. Thank you.
The Chinese government will rely on a core circle of old friends on Wall Street and in Washington to influence the Biden administration, according to a Chinese academic with ties to the communist regime. Di Dongsheng, the associate dean of the School of International Relations in Renmin University, offered his predictions about China-U.S. relations in the upcoming administration during a speech in Shanghai on November 28th. Di asserted that Beijing was unable to fully respond to a trade war that President Donald Trump waged because the Republican was invulnerable to influence by Wall Street. According to the Washington Times, Di said at the event, Wall Street had a very profound influence over America's domestic and foreign affairs since the 1970s. We used to heavily rely on them.